Hey everybody, Dave here, Hidden Freedom. Welcome back to another video. In this video, I want to go ahead and go through all the dividends received for the month of October. October was another record-breaking month for me for dividends received. And it looks like going forward that November is also looking like it's gonna eclipse October, and that's partially because of the windfall I received a few months back. And all that money is pretty much invested now, so I do think that the dividends should start leveling off a bit, but so far, this is a record-breaking month, and this is also a record-breaking month for the whole portfolio in general as well, and that's partially due because we've had a magnificent October as far as returns, and we're actually right out of the starting gates for November as well. Does look like the market's getting a little toppy though, so let's not waste any time, let's go ahead and get started. All right, we are looking at the agenda for today, and this is the agenda. So we just saw Dividend Mountain there, and Dividend Mountain, there's been an update there. Obviously that hiker is pretty much almost up to the 3/4 mark, and that is obviously because we've had a wonderful, fantastic October as far as returns. Market's pretty much just almost in a straight line up in this point, right? And I do think that we're pretty much near the top. We're kind of toppy. We're reaching that upper trend line. So I don't know if the market will continue. It'll probably end up going down a bit before it goes back up. So anyways, basically that hiker has reached a new milestone. If that hiker reaches the $1 million mark, which I see happening next year when I retire early, I'll roll over the 401k into this portfolio, because right now that's not even counting, that's not even included in the portfolio at all, really. So once I roll those funds over, we'll probably end up updating the Dividend Mountain to reflect 1.25 million, which is a better realistic goal at that point. So anyways, it's nice to see him move up and, you know, pretty much get 3/4 of the way of that mountain. So all right, brings us down here to overview. And so let's go ahead and take a look at the overview of the portfolio. Here is the overview of the FIRE investment portfolio. So right now there's $748,991 in this portfolio. Like I said, that hiker reached 3/4 of the mountain, which is pretty much right there. This brings in an annual dividend of $43,935 for a monthly dividend income of $36.61 and daily income, dividend income of $120 and hourly dividend income of $5, basically $5.02. There's a little bit of free capital there that's going to get reinvested back into JEPI. This is a hybrid portfolio, so there's partial of this portfolio in the tax deferred account that actually is not really invested in much dividend stocks at all. That's invested in QQQ at this time. When I roll over the 401k, that's not going to really invest it in any dividend paying stocks or anything like that. I will be into SPY, QQQ, IWM, and yes, those do pay a dividend, but they're not really focused on dividends. So this will become a hybrid portfolio at that point. But you know, this is not all just about dividends, right? I just want to show the dividend there because obviously that's what this update's about. It's about, you know, how well the portfolio is doing, and what it's in addition to that, it's how many dividends or how much dividends I'm getting paid or produced by this portfolio as well. So right now this portfolio is up $52,600, and that's a 7.56% return. And I've been bleeding off a lot of capital out of, you know, individual positions and whatnot, trying to execute my plan, and I've talked about that in one of my videos. If you want to look at that video, look at that video up here, and it talks about the complete strategy of what I'm going to be doing. So if you're interested in seeing that, I highly recommend you take a look at that video, because it talks about the hybrid portfolio, how I'm going to be using income ETFs, how I use individual stocks, how I use the indexes like SPY, IWM, and QQQ for growth, in addition to providing income as well by running covered calls and just wheeling those essentially. All right, looking back at the agenda here, we pretty much saw the overview of the portfolio. Let's go ahead and take a look at 2A here. So if you're interested in my spreadsheets, basically I just did an update. You should have got an email. If you already bought them, you got an email. This is the new look for it. So I pretty much changed that and got rid of the dividend growth section out of there. It was, basically it didn't provide a lot of value. Maybe I'll provide that down the road if somebody's interested in it. I don't know. So basically for anybody that's bought the spreadsheet in the past, you're grandfathered in 1.7 with the dividend growth section, and here's 1.8 right here. So I've kind of changed the outlook and kind of gave it a different look. I got the treasury bonds there. It has the 10-2 spread there, so we can kind of have an idea of when basically the spread is going to invert. And it gives you an idea that a recession's on the way. I provided year-to-date information there, and I also provided updated investing goals section as well. So as anybody buys the spreadsheet going forward, you'll get the 1.8. For anybody that's bought the spreadsheet, you should got an update already, and you can download the new spreadsheet, the new look here. So you'll be grandfathered to 1.7. You can continue to use that one if you want, but I'm not going to do any updates on that one. So if you were interested in the spreadsheet, you can look at the first pinned comment or down in the description as well. All right, brings down to 2B here. Still roughly about $452,000 left into real estate notes, and those get paid back every single month, roughly about $1,000 in principal and roughly about $3,000 in interest every single month. Until those get bled off, I'm going to show them here, because all that capital that comes out of those goes right back into the dividend portfolio. And I don't really even spend it all. So if you're interested in promissory notes and what those even are, I did a video on what promissory notes are. You look at that video up here if you want, and it's a pretty in-depth video, at least on what they are and how they work, and it gives you the basics anyway. So if you're interested in those, take a look at the video. And that brings us down here to 2C. If you're interested in seeing my hidden off-grid channel, I do run a second channel, and that is mostly all geared towards fire and what I'm going to be doing after fire and preparing for fire and all that. And I've been sharing some stuff over there that I don't share on this channel, but eventually it's going to be, nomad and traveling and, hiking and stuff like that related. So, all right, brings us down here to the dividend portfolio. So let's go look at the dividend increases for the month of October. I know there was a couple because I had already looked. All right, let's go to the current portfolio here. Let's scroll over to the right a bit. Okay, that brings us to this section here. We'll scroll up. So we've had quite a few dividend increases here. We have McDonald's, we have Starbucks, and we have ExxonMobil. Let's take on ExxonMobil first. So ExxonMobil had a relatively small increase. It still counts though. So we had a 1.15% dividend increase, and that keeps them in a dividend aristocrat status because they only really need to raise by a penny, and they raised by, 4 cents. So we're going to take it. That's a little bit less than what we'd expect, but like I said, it still counts. So let's go ahead and clear that flag there. So 3.52. All right, that flag is clear. Let's go on and move down the second one here. That's Starbucks. Starbucks had an 8.89% increase. That is absolutely amazing. So we went from $1.80 annually up to $1.96 annually, and that is pretty much not quite in line, but we did have a pandemic year last year, and even partially of this year was counted in there as well. So it is a little bit less than what we'd expect, but it's still pretty darn good. Let's go ahead and clear that flag, 1.96 there. All right, so we cleared the Starbucks, and let's scroll down here. So we got McDonald's, the next one here, and we had a 6.98% increase on McDonald's. We went from $5.16 up to $5.52, and that is actually higher than what we expect, at least for the 1-year dividend CAGR. 3-year, it's a little bit less than the 3-year, and pretty much just right in line with the 5-year. So I'm not going to complain. Pandemic, kind of affected McDonald's quite a bit. So it is what it is. We'll take it. That continues the streak to Bring that up to see they're already aristocrat. They're on their way to a dividend king at this point with 46 years consecutive dividend increases. Let's go ahead and clear that flag. 5.52. All right, I do know for a fact that we had AbbVie that increased as well. And where is my AbbVie? So AbbVie's right here. I'm not going to put that in there in this month because it actually hasn't updated for me yet. So I'll throw that actually in the December update. But I do know for a fact that AbbVie already updated, or at least they've already announced it. So that takes care of the dividend increases. So here's the sales for the month of October. Obviously, this is a misleading just because, well, it's not really misleading. Actually, all of these were sells, but I did not get out of every one of these positions, if that makes any sense. I just trimmed some down. So VYM I completely got out of, so that closed that position down. I sold over $22,700 in VYM. MO I completely sold out of. I do not own MO anymore. Does not mean I don't like MO. It just means I wanted to trim it out. I was heavy in staples. And it's also a decline in industry, so I just decided to get rid of MO. I know there's a lot of people that love MO. You know, more power to you. I don't think that is, you know, a bad stock or anything like that. I just wanted to get out of it, reduce my staples exposure a bit, and MO seemed like the likely one to cut for me. I did sell out of a little bit of Microsoft. I did sell out of a little bit of PG, Apple, KMB, Pepsi, Johnson & Johnson, McDonald's, JP Morgan, and Microsoft. But I still own every one of those positions in well. This is just to get me down to about $110,000 in individual stocks, because that was part of my goal and part of my strategy going forward, to reduce the individual stocks down to roughly about $110,000, which I talked about in a previous video, which I linked earlier in this video. Total sales was $32,515, and that turned around and right back in to the portfolio, which we're going to look at the buys right next. So those sells went right back into the portfolio, and it kind of got distributed between these 6 stocks right here, 6 ETFs. All right, so we put over $45,000 of capital to work in JEPI, went $43,000 of capital into DIVO, $35,000 of capital into NUSI, we got $8,500 into QQQ, we got $5,500 into QYLD, and we got $4,300 into XYLD, for a total addition of $143,419. So obviously, if you take the sales from the previous section there and you subtract it from that, that means there was over about $100,000 of fresh capital that went into the portfolio from the windfall. All right, we've looked at the dividend increases, we've looked at the sells, we looked at the buys and adds, and obviously let's go back to the portfolio here. Here is all the positions. You can pause the video if you want, but there's all the positions right there. And you can see all of the ETFs near the bottom. I got one ETF at the top up here. SCHD has got one share in it, which we built out, which I've talked about in the update hybrid strategy video that I did. So pretty much, so you know, XYLD and QYLD are right where I want them at $50,000 roughly. QQQ is in a different account. That will be continuing to be built out until I get up to roughly 200 shares or $200,000. $200,000 once the real estate notes get bled off. And then we'll just sell covered calls against the QQQ as well. We got JEPI, we got NUSI and DIVO, roughly about $150,000 each. I do have plans of building out DIVO and JEPI probably to about $200,000 for JEPI, roughly about $165,000 to $175,000 for DIVO, and NUSI, I don't know, probably keep that one about $175,000 or so, maybe a little bit less, not really sure yet. All right, that brings us to the stock allocation. So let's look at the stock allocation here. This is the current allocation, and this is just showing individual stocks, no ETFs at all. And so we got consumer staples. Like I said, we wanted to get rid of MO just because I'm heavy in staples, which is okay. I'm okay with that. 22.8%. We get utilities there at 4. We got financials at 7.8. We got, let's see here, healthcare at 11.5, we got materials at 3.1, we got real estate at 3.2, we got energy, still a little heavy on energy, but that's okay. 5.1, we got industrials at 8.4, we got consumer discretionary at 13.5. We got communication services, which is just AT&T at this point, which has been on a major sell-off. We may add later on after the dividend cut, we'll see. And we got information technology there at 18.5. Let's go ahead and look at the dividends received for the month of October. Here is all the dividends received for the month of October. Like I said, the month of October was another record-breaking month for me. Received 9 total dividends for an amount of $3,060.35. We received a dividend on KMB. Received a dividend on JEPI, $573 there. That's a monthly payer. We got MO in there. It's going to be the last payment for MO. We got Realty Income, which is another monthly payer. We got NUSI, which is a monthly payer, $942 for NUSI. QYLD is a monthly payer, is $439 there for QYLD. We got XYLD there is another monthly payer at $344. We got DIVO is another monthly payer there, $596 from DIVO. And we got QQQ, which is a quarterly payer of $58 there. And that is another record-breaking month, and we're going to eclipse September, I believe. So the next thing we're going to do is we're going to update all those $3,060 of dividends across my portfolio. So we'll update this gauge here. We'll update all the charts, and then we're going to write all those dividends received across this line right here for all the dividends received. So let's go ahead and run a script to do that, to make our job a little bit easier. So we'll go back to this page, we'll pop up the script, and here's the script right here. So we'll go ahead and run that to update the dividends received. All right, script finished. So we updated the $3,060 across the portfolio there. So we saw this gauge go up. We got up to $19,206 of dividends received this year. And we're on track to meet or beat or exceed our $25,000 goal for this year. Next year, we're looking at about $45,000 to $50,000. So I already set the gauge in there. So we scroll down here. Here is the dividends by month. So we actually obviously eclipsed last month's of $26.59 significantly. So we went up from $26.59 up to $3,060, and obviously this quarter is going to be an amazing quarter. So scrolling down here, we're looking at the quarter here, and this is the first month for the quarter. October, November, December. So we're going to obviously kill Q3 of $6,500 significantly, probably upwards of over $9,000 we're going to see for the quarter of Q4. So that brings us down here, the yearly chart. So there's $19,206. And obviously last year was a full year of dividends for me, but I also just started the dividend portfolio last year in 2020. So that's, obviously a major increase from last year. And then going back to the portfolio here, we can see all the dividends updated across the portfolio, that line right there. So the only thing we need to do in here is just make sure that we got 3,060 in there, and we do. And then we're just going to turn this MO line here to red, because we're not going to be getting any more MO dividends anymore. So we'll just turn those red, because all of these ones in red, I do not own anymore. All right, we looked at the dividends received. We ran this script, and it brings that. We already looked at the dividend metrics as well. Brings us down here to the options income, and I had an amazing month for October for options income. So looking at the options here, let's see the options report. I have this filtered for October, and these are the top plays for October that produced the amount of income there. We had a $5,000 gain in the month of October, selling mostly cash secured puts. A little bit of leaps in there, a little bit of strangles, and a little bit of spreads. But $5,000, that's an amazing month. We're up over $45,000 for the year. And we're already up $842 for the month of November. And it's only been 4 days of this week. So we're off to a great start. The very last thing we're going to do is we're going to look at my Schwab positions in my Schwab account, just to basically appease one person that complained that I didn't show my positions in Schwab and only in Google Sheets. So we'll look at that. We'll also look at the dividend projections for November because we want to see whether or not we're going to basically have more dividends than October, which I think we will. All right, I'm logging into my Schwab account here, and this is the top of the account here. So $747,000, 594. And then we scroll down here. Here is all of the positions, and I'll kind of just scroll through them slowly, but here is all the positions right here. And then we get down to the ETFs right there. And then we get down to some covered calls because I do cover calls against the QQQ in one account. And actually when I fire next year and roll the 401k over, I'll be getting into SPY, IWM as well, and doing more covered calls against those as well. So there is all the positions in Schwab. Now let's go ahead and take a look at the show investment income. So here's the show investment income. October is in the books. It shows 3121, which actually wasn't correct. I showed it as being 3060. And which I'll just have to go back and double check to make sure I had the right amount. But so November is what we want to look at here. So we want to look at November. November, I'm showing $3,700 of income. That's amazing. We've already received $45, which was, what the heck was that in? I don't remember what it was in. I think it was MO. No, it wasn't MO. I don't know what the heck that was in. So here is November right here. We're showing $3,700 of income for the month of November. And yes, that will be $700 more than October. And let's go to, let's see, next 12 months here. We got, let's see, December, $3,900, because I think actually December has got a lot of individual stocks that's going to pay for the month of December as well. But that brings they're showing my average monthly income at $3,800. My dividend portfolio shows it at $36.61, and that's just because there's a discrepancy between Schwab's dividend yield for some of my ETFs and stocks. So I try to go on the conservative side. They're showing it at $3,800. I'm showing it at $36.60. So that's another, what, 100 and some odd dollars, $150 or something like that, less than what Schwab is showing. So I don't know which is right. Like I said, I'd rather be on the conservative side though. And that's over $45,873 of income they're projecting for next year, or the next 12 months, I should say. Obviously, I'm going to continue to reinvest the dividends until I fire, and then I'll start living off of some of these dividends, and then reinvesting a lot of that capital right back into the portfolio if I don't need all of the income. So that's the update for the month of October. If you have any questions, let me know down in the comments. So anyways, I'm looking forward to getting November in the books as well, and we'll do an update in the first month or the first week of December. So if you're interested in seeing future videos like this and also my journey after fire, go ahead and subscribe to the channel. Till next time, go ahead and like and subscribe. We'll see you in the next video. Thanks for watching.